Section 3 Stock Trading Signals. This course has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please pause the video now to read the full course disclaimer. Okay, let's continue. Stock trading signals occur when there is a crossover among prices and technical indicators or between technical indicators and certain bands, center lines, or signals. This crossover signals stock buying or selling opportunities and when it is overbought or oversold. They can either be applied individually or in combination with other stock trading signals. To calculate them, we'll be using loops, in this case for loops with the notation for I in n, which means that it's going to iterate through all the rows within our data frame, and it's going to ask the following. First, if buying signal is equal to true, then trading signal variable is going to be equal to 1. If this is not the case, then we have a second if, but this if is a nested if within the original if, therefore it's an else if selling signal equals true. If this is the case, then our trading signal variable is going to be updated with -1. If none of the above conditions is met, then we have else, in which our trading signal is kept at 0. So 1 is buy, -1 is sell, and 0 is do nothing. Great. So let's go back into our Python PyCharm IDE to see what this section will contain. Excellent. So here we are back within our Python PyCharm IDE. In this section, we'll be working within all of our code files. If you have any questions about how we created the project you're looking at, how we created all those corresponding files as well, how we download, import, and then load the corresponding packages, also how we perform our data downloading or reading, please go back to section 1, Stock Technical Analysis Data Lecture, where all of that is explained with greater detail. So, the structure is as follows. First, we'll study single indicator-based trading signals. For this, we'll begin with lagging indicators, simple moving average, exponential moving average, Bollinger Bands, and close with parabolic stop and reverse. Then, continuing with single indicator-based trading signals, but in this case, with leading type of indicators, we'll study average directional movement index, commodity channel index, moving averages convergence divergence, rate of change, relative strength index, stochastic oscillator, and then Williams percentage R. Once we finish with this, we'll continue with multiple indicator-based trading signals. In this case, we'll combine simple moving average trading signals, which need to be confirmed by one of those leading indicators. Therefore, we have SMA and CCI or commodity channel index, then SMA and ROC or rate of change, SMA and RSI or relative strength index, SMA and STO or stochastic oscillator, and we'll close with SMA and percentage R, which is Williams percentage R. So, let's go to the first of our files, which is our simple moving average. As they are all meant to be standalone files, they have similar structures. First, we import our packages, then we read our data by default. Next, we calculate our corresponding technical indicator with its associated chart, and then we proceed to do, such as in this case, a price crossover type of trading signals calculation. We'll do previous period's data calculation to avoid backtesting bias. This means that we'll implement our corresponding trading signal one period later from when it's observed. Then we'll generate our corresponding trading signals. As mentioned in the slides, buy equals 1, sell -1, do nothing equals 0. We'll store them in their corresponding column, and we'll update their values with a variable which we'll use within our corresponding for loop, in which we'll have those conditionals if for the buy signal, the nested if for the sell signal, and if none of these two is met, then it will remain as 0, which is do nothing. We'll update that corresponding column as mentioned above. Then we'll have the corresponding trading signals chart. In this case, we have a subplot with two of them. First, our close prices with the technical indicator, and below we have our corresponding trading signals. So just highlighting the differences, going into the first of our leading indicators, but in this case with single indicator trading signals. Again, similar mechanics of importing packages, reading our data by default as well. Then we are calculating our technical indicator. Then we're doing is charting, and we proceed to do the corresponding, in this case, bands and double crossover trading signals. Again, using previous periods data to avoid backtesting bias. Then we have our generation of trading signals, buy equals 1, sell minus 1, do nothing 0, by using that for loop with if conditional, first for buy, nested if for sell, or 0 for do nothing. Then we're going to do the chart, and here the difference is that we have three subplots. First, our close prices, at the middle we have our corresponding oscillator, and then at the bottom we have the corresponding signals associated with this strategy. Then, studying our corresponding multiple indicator based trading signals as an example, we'll use SMA and CCI, or commodity channel index. Again, with similar structure, we have our packages importing, data reading by default, then the calculation of our technical indicators, which in this case we have two of them, our simple moving average and commodity channel index with their corresponding chart. Then we calculate trading signals, which in this case is a price crossover which needs to be confirmed by bands crossover through certain thresholds. Therefore, we're using previous periods data again to avoid backtesting bias, generating buy equals 1, sell minus 1, or do nothing 0 trading signals. The first if conditional for a buy signal, the second else if or nested else if as sell signal, or else, which is do nothing. Then we have our corresponding chart, again with three subplots. In this case, we have at the first our close prices with their simple moving average, which generate those price crossovers. Then we have at the middle our oscillator, commodity channel index, with corresponding thresholds for overbought or oversold areas. And then at the bottom we have the corresponding trading strategy signals. Once we finish with all of this, it will be time to continue to study how these trading signals generate their associated trading strategies. But before doing that, let's continue with the first of our single indicator based trading strategies with our lagging indicators, which are our moving averages through simple moving average and exponential moving average, which will be our following objectives.